All right. Why don't we go ahead and get started? Maria, give me a thumbs up if you're ready to go. All right. Good evening, everybody. My name is Dustin Tondreau. I'm the CBC Wealth Management Wealth Advisor here at CBC Federal Credit Union, partnering with LPL Financial. It's a pleasure to have the opportunity to speak with you this evening. I'm accompanied by Maria Prendiz. Maria is the AVP of our insurance services here at CBC Federal Credit Union. I'm going to take the time to talk to you about a concept that I utilize with a lot of my clients, kind of call it money with a purpose. And Maria will then take over and talk to you about the life insurance 101s, the do's and the don'ts, if you will. So in the interest of time, why don't we go ahead and get started? So here's a quick agenda for the items that we're going to discuss today. I'm going to start off by telling you a little bit about myself, who I am, how I found my way to CBC Federal Credit Union, talk about who LPL Financial is, how they fit in at CBC, give you a general overview of the topic, then talk about our process and kind of how we deliver that process and continue to monitor it over time. So here's a little bit about me. Everybody likes to know the why behind how we wound up where we are, right? So I have a passion for helping people with their finances here in the Ventura County area. I've been born and raised in Ventura County my entire life. I recently moved to Ventura about 8 months ago now. So I put some pictures up here for your guys' enjoyment. That's a picture of me with my sister at her wedding. She lives in Israel. Fun fact, story for another time. I also enjoy playing golf in my free time, and there's a picture of my girlfriend and I. So who's LPL Financial? It's very important for us to have a foundation and an understanding of the fact that CBC Federal Credit Union and the products and services that I offer are separate entities, but I'm employed by both. Okay, so I've kind of got my feet in two buckets, right? While I'm an employee of CBC Federal Credit Union, we have a lot of members, probably such as yourselves, that are looking for general financial advice and education. We have some sort of goal and we want to figure out how we can get there. The tools and products and services and the licenses that I hold are held with a brokerage firm, and that brokerage firm is LPL Financial. They're well known in the industry. They're the #1 independent broker dealer in the United States. They have over $1 trillion in assets under management. They're the #1 for partnering with credit unions and banks to provide this service. There's a compliance issue where a bank or a credit union legally cannot offer anything other than NCUA or FDIC depository insured accounts. But what if we want to have the opportunity for our money to grow a little bit more than what a bank or credit union might offer, and we're willing to take some sort of calculated risk with that money? That's where a brokerage firm comes in, and we've partnered with LPL. Okay, common question. Am I on track? Now, as you can imagine, that's a very subjective question. What I have to do kind of as like a finance doctor, I guess, for lack of better terms, is paint a picture, right, of where the member or potential client is who's sitting in front of me at today, and where are they trying to go? What are the questions or concerns that they have? What are the goals that they're trying to achieve? So a common thing that I get is, Dustin, I wish I would have met you 20 years ago. So it's never too early to start. But we actually, and what I'm going to teach you a little bit about today, is we actually have a quantitative process where I can tell you whether or not you're on track to reaching your goal through some sort of economic modeling. So what's the first step? The first step is I've got to get to know you, right? I'll likely have met you through an introduction, maybe from someone in the branch, or maybe I've reached out to you directly because you had a certificate of deposit that was coming due to mature. Those are just a few examples. This image that you're looking at is basically the way that I take notes when I go having a meeting. So I have to explain how I fit in at the credit union, as I just have, explain how we work, and then I need to get to know you. I ask a series of questions such as, what's your family structure like? What's your income look like? Where do you work, if you work at all? What goals do you have? What liquidity needs might you have in the next 2 or 3 years? When do you want to retire, right? Are you retired? Then I move on to building a balance sheet, understanding the assets and liabilities, again, where you are today and where you're trying to go. I want to know more about your investing experience, if any. And often enough, there's opportunities for me to look at things like your estate planning needs, or as Maria is going to talk to you about in good detail, is do you need some life insurance, or is there ways for us to reduce the income or the expenses that you pay on something like an automobile policy? And we'll let Maria talk a lot more about that in a minute. But naturally, I work with a handful of people, and Maria is one of my centers of influence who I often collaborate with. So, and I also want to get to know you. Fun facts, what do you enjoy doing when when you're out of the office or not at work? And those kinds of things are important for building a relationship. Once we've painted the picture and I better understand, okay, where are you and where are you trying to go? The next step is education, right? I take a lot of a lot of pride in educating my clients and my prospects so they have a clear understanding of what tools that we have available to us might be best for that specific individual. On this slide, there's just a couple screenshots of some things I typically go into detail with when I meet someone for the first time, such as a finance pyramid, right? Is the bottom secure? And if not, what tweaks do we need to make? I always focus specifically on investment planning because that's my primary role here. And then the goal is, when all of these things are working in good unison, that we reach a state of financial independence, right? And what does that look like? And that's different for everybody. A lot of the tools that we might use are some sort of fixed or variable investment, right? And there's pros and cons to each one of these tools. I'm going to show you on a couple of slides how I like to take a bucket approach, right? Everybody should and probably likely does have different buckets of money for different reasons. Now, often enough, there's some opportunities for us to adjust how those buckets of money are working. But the first step is to make sure that you understand what's going into the buckets and why. What you're looking at now is a screenshot from a sample retirement plan that I did for a member a few months ago. And again, this is just a sample. There's no confidential information listed here, but this gives you an idea of what type of planning we can undergo. For example, let's say after we go through all the fact finding and get to know one another, the member says, hey, Dustin, I would really like to retire at 65. Is that possible? Well, I'll tell you. And what this graph is showing you is a hypothetical example of somebody retiring in 2029 on the blue line. Now, the blue line that's trending downward year by year by year is their current growth path, okay? They're not taking really any risk with their money. In this hypothetical scenario, they've been saving for their retirement in their checking or savings account. Not probably the greatest idea, right? But you'd be surprised. I see it from time to time. Now, the target path line shows what we can do by maybe becoming a bit more efficient with asset allocation and diversification. And in the top right there, that's where you'll see the probability of success meter. So let's say that the current scenario isn't to our liking. Well, there's certain things we can do. What if you spend less? What if we earned a greater return on your investments over a period of time? What if you retired maybe a year later than you were thinking? So what we can do by working together is come up with some sort of plan based on your specific situation. And this is a tool that I help that helps me and you work together to accomplish that goal. So I was talking about buckets. Let's talk about buckets, right? In this hypothetical scenario that I just gave you, and again, I do see this a good amount. We've got money sitting in one place, whether it's a checking or a savings account, or I've even seen people with money just in a safe at home, right? Why don't we take the opportunity to diversify that money and take some strategic and calculated risk based on certain things like your goal, your personal risk tolerance, and the overall investment objective. Once we better understand that, I can meld that into this model to help create our target path. Now, here's an example of a way that we can diversify. So I've kind of color coordinated the different buckets, if you will, to show whom might own them and why. We always want to utilize the tools and services available at CBC Federal Credit Union. You always want to have an emergency fund. That's one of the key things that's on the bottom of that finance pyramid that I showed you a few slides ago. How much is appropriate? As a blanket rule of thumb, I typically tell people they want to keep somewhere between 6 to 12 months of living expenses available in case of an emergency. What's not listed there is, well, what if there's another short-term goal? Common ones I hear these days are home remodel, maybe a nice vacation, right? Any money you plan on spending in the next year or two, maybe even 3, you want to keep readily available because you don't want it fluctuating in value and experiencing a downturn right before you're about to use it. Then we could set up some midterm buckets, right? Money that's maybe you might use in the next 4 to 7 or 8 years. 529 plan, maybe for your child. Maybe you just have a general purpose investing account that you want to hopefully see some growth on beyond what a bank account might offer. And then we've got the long-term money, right? Your retirement plans. Now, this is pre-retirement. What happens when you retire? That's a very big shift going from an accumulation phase to a distribution phase. So we take a different plan and a different strategy when we go that route. Here's an example of a post-retirement bucket strategy. We've still got our money for short-term needs. We've still got our midterm money, and we've got our long-term money, right? And once you reach this age of 72, fun fact, you're required to start taking money out of your retirement money. Well, at least pre-tax. A lot of people are like, hey, Dustin, I don't want to spend that money. So we can just simply move it to another bucket, right? You have to pay some taxes on it, but it can remain invested. Now, these bucket strategies and your financial plans, they're going to change throughout the course of your life. It's almost a guarantee. I can't guarantee a lot of things, but life throws curveballs. And we're here to help you when changes happen. Sometimes they're great changes, and sometimes they're unfortunate and unpredicted changes. But nonetheless, the importance is having a plan. And this is just some general information about our process, how we work here at CBC Wealth Management, and what I really have a passion for in helping people with. So I want to thank you guys for your time. If you want to quickly jot down my contact information, I'd love the opportunity to speak to you one-on-one about your specific situation. And I am going to kindly ask that we hold all questions till the end of the meeting. You probably have questions about things going on in our economy today. Inflation's a hot topic. I'm happy to address things of that nature, but I want to turn the floor over to Maria, and then we'll do a joint Q&A session. So again, thank you everybody for your time, and without further ado, I'm going to turn the floor over to Maria.
Okay, let me go ahead and share my presentation. Can you guys all see that? Awesome. So good evening, everyone. Thank you for joining us, and thank you, Dustin, for inviting me to speak on such an important subject today. I hope to give you some information and some value. Also, you will be learning important basic life insurance concepts and our product offering at CBC Insurance. The agenda for today is you'll get to know a little bit about me, who is Crump Life Insurance, how to estimate your life insurance need, our life insurance products, the life insurance process, and also life insurance review. So a little bit about me. I am an Oxnard native. I graduated from Channel Islands High School, went on to Oxnard College, and then graduated from the University of California, Santa Barbara. I have about 15 years of experience in the insurance industry. I began my career in the life insurance industry. Then I went on to get my P&C license, and I worked for AAA Insurance for a few years. Then I went on to work for Brown & Brown Insurance, writing commercial. And now I'm here at CBC, and we have CBC Insurance. And we're building this great insurance agency to help all of our members and also non-members. I'm married to my high school sweetheart for over 27 years. We have two beautiful children who are now in college and costing me a lot of money. I have a large family that lives here in Ventura County, and I have parents that have been married for over 50 years. I have a passion for helping families in Ventura County secure their loved ones. I enjoy helping and educating others. I believe in giving back to our community where I was raised. And during the pandemic, I witnessed a lot of friends and family lose loved ones. And more than 90% did not have life insurance. They had to resort to donations, car washes, food drives just to be able to bury their loved ones. So more than ever, it's so important for me to be able to provide information and education to as many people as possible. So who is Crump Life Insurance? Crump Life Insurance is a broker general agency that allows us to write life insurance with quality carriers. And they were established in 1920. So they've been around for more than 50 years in the life insurance industry. They offer quality life insurance carriers, AIG, Alliance, Lincoln Financial, Nationwide, Protective, Prudential, Transamerica, Symetra, to name a few. And they offer fixed and variable products options such as term life insurance, whole life insurance, index universal life, and long-term care. And that you have access to them 24/7 online access. So they have a strong relationship with carriers. So you can rest assured that your policy is with a trusted carrier. The question is, do I need life insurance? Well, most people already have life insurance through their job benefits, right? But what happens if you no longer work there? If you get laid off or you decide to leave, you can decide to keep the life insurance, the group life insurance. However, it's going to be much more expensive. So I always recommend to have a separate policy just in case. Also, of course, if you have a family, life insurance is absolutely essential. If someone you cared about would suffer if you were no longer able to contribute financially. This includes a spouse, children, disabled family members, aging parents, or anyone else who depends on your earnings to make ends meet. Also, of course, if you have a mortgage, will your significant other be able to make the mortgage payments without your financial contribution? Life insurance can help you pay off the mortgage. And also college education. Life insurance can also secure the future college education of your children and loved ones. And it can also help you pay off outstanding healthcare bills, credit card debt, car loans, as well as funeral and burial costs. And in retirement, life insurance allows you to keep up with household expenses during retirement. So how much life insurance do I need? Well, everybody needs a different amount of life insurance based on their individual situation. What it basically comes down to, though, is how much money would your loved ones need to be able to survive financially if you passed away? So some of the questions that you might need to ask yourself are, who do I want to protect? How long would they need financial support? Is anyone disabled or have other special needs? How much debt do I have? How much savings do I have? Were you planning on contributing to a child college education? Will my spouse or partner need help with funding his or her retirement? There are 3 easy ways to estimate your need. You can do calculation number 1. You multiply your gross yearly income by 10 or 15 times. And then if you have children, you can add $100,000 per child for future college education expenses. There's also calculation number 2, where you first add up all ongoing and future expenses, also add up the financial resources you have. That could mean a spouse's income, savings, investments, and life insurance that's already in place, and then subtract your financial resources from the anticipated expenses. The difference between the two numbers is the approximate life insurance to buy. Or you can simply do calculation number 3, which is use a life insurance needs calculator. You just simply answer a few questions, and you should be coming up with a total that you need for life insurance. There are 2 different types of life insurance products. There's term and there's permanent. So term is like renting a house. You can rent it for 10, 20, 30 years. After the term is up, it expires. And permanent is like buying a house. It's yours until you pass away. And term policies are very attractive because they can be very affordable. For example, if you have a healthy 30-year-old non-smoker can buy a $250,000 policy, 20-year term policy for about $15 a month. And it's also very, very flexible. Flexibility is you get to choose how long you want coverage for based on your needs. You can do 10, 15, 20, or 30 years. And it's very simple. All you have to make are two decisions: how much coverage you want and how long you want it to last. And sometimes it may not require a medical exam. There's a lot of programs now that don't require a medical exam. You can do a simple medical phone interview. Now, permanent covers you for life as long as you pay your premiums. So many people gain peace of mind knowing they will always have coverage in place. And it also comes with lifelong coverage. And it also gives you living benefits. And living benefits build cash value over time, which accumulate on a tax-deferred basis, just like assets in most retirement and tuition savings plans. The money can be used in the future for any purpose, including important milestones such as a down payment on a home, college tuition, or retirement. And it also provides many options. Some offer a guaranteed rate of return, while others let you choose a mix of investments for a variable rate of return. With so many options, life insurance policies out there, it can be a little confusing about which one is the right fit. So one of the best ways is to work with a licensed insurance agent who can walk you through the entire process. So let's look at those living benefits. And what are living benefits of life insurance? These can be used while you're still living. So for example, accelerated death benefit. This pays out a portion of your term life policy if you ever face a terminal illness. This gives you needed cash to cover medical expenses, debt, and more. There's also return of premium. All of the premiums you paid during the term are returned to you so long as you don't pass away during the term. This type of policy is usually more expensive. And there's also disability waiver of premium. This living benefit lets you skip your premium payments in the event you suffer from a long-term disability for 6 months or more. Now let's look at the living benefits on a permanent policy. On a permanent policy, you have your death benefit along with the ability to accumulate cash value on a tax-deferred basis. So a permanent life insurance lets you tap into needed funds throughout your lifetime in 4 other important ways as well. And one of those is cash value withdrawal. A withdrawal lets you access a portion of the cash value of your retirement of your permanent life policy, and you won't owe any taxes until the withdrawal if the amount you withdraw is less than or equal to your premium payments. And also, you can take out a policy loan you can also take out a loan against your permanent life policy. The interest charge is it's a lot less than any other lenders. And you also won't have to undergo a credit check or any restrictions. You can also do a policy surrender. A policy surrender is when you cancel your permanent life policy to access the cash value portion as a one-time lump sum. And you also can do long-term care benefits. This lets you tap into the death benefit to cover long-term care expenses that your health insurance doesn't cover. It's valuable when you consider that 70% of people turning 65 today will need some form of long-term care in their lives. So let's look at beneficiaries. So a beneficiary is simply who gets the payout on the life insurance policy in the event you pass away. And a beneficiary can be a person, it can be several people, it can be an estate, a trust, a charity. So just know that you can name more than one beneficiary. You can name one, you can name two, you can name several, and you can assign a percentage to each one. Also name a secondary beneficiary. That's a contingent beneficiary as a backup. He or she receives the life insurance payout in the event the primary beneficiary is no longer alive when the payout is being made. And also be specific with names. It's best to list the names and social security numbers of each beneficiary. You want to prevent any confusion and speed up the payout process. And then keep your beneficiaries in the loop. Tell your life insurance beneficiaries about your plans and give them copies of the policies. And then you also want to review your beneficiaries once a year. You can always change your beneficiaries at any time. So what is the process in applying for a life insurance application? So you would, of course, first of all, speak with a licensed professional at CBC. Then you would they would help you complete a simple application. It takes about 10 or 15 minutes. It's about 2 pages long. And once the application is submitted, then it goes to medical, then they'll require a medical exam or sometimes just a phone interview, medical phone interview over the phone. And then it goes to the review process or underwriting, where you may be asked to answer a few more questions. Once it's approved, then you can just start your monthly payments or pay in full. So you want to review your policy once a year. It's a good idea to review it once a year with your life insurance agent, at least every year. It's a way to make sure that you have the right kind of coverage to protect your loved ones. And life events that should trigger a review of your life insurance include getting married, buying a house, having or adopting children, a new job or promotion, buying or selling a business, paying off your mortgage, or retirement. But also, if you have improved health from losing weight, exercising more, quitting smoking, and getting control over any issue like high blood pressure might also help you get a better rate. Okay, so let's look at how to file a claim for a life insurance policy payout. So first of all, you have to locate your policy. If you can't find the policy, you want to contact your life insurance agent or the company that issued the policy or the human resources department of the company that sponsors the group life insurance you have. If you still can't locate it, you can search it by going to the NAIC Life Insurance Policy Locator Service, or that's the National Association of Insurance Commissioners. And then you also, of course, want to obtain a copy of the death certificate. You can check with your state or county or funeral director. Then fill out a request for benefits. This is a claim form from the life insurance company that you can get from the insurer or from your life insurance agent. And also pick out a payout option. You can have, there's 2 different ways. You can typically have 2 choices. You can either do a lump sum. This option gives you the entire death benefit all at once, or you can opt for an annuity. This option pays you the death benefit over a set number of years. And of course, you want to send the paperwork to your insurer as soon as possible to prevent any delays. So to make sure your loved ones are fully protected, work with a licensed insurance agent who can walk you through the entire process. I'm available to help you answer any questions you have. Please call me or email me. I would be more than happy to assist you. Keep in mind that CBC Insurance also offers auto, home, and business insurance. Let us know if we can provide you with a free quote. This concludes my presentation. Thank you all for joining us. We will be opening it up for any questions you might have for us.
That was great, Maria. Thanks for sharing. I see we have some people with a hand up here. Heather, I don't know if you can help me in assisting how to unmute maybe, or.
Oh, Heather, I don't know how to unmute people.
I have unmuted Jeanette.
Oh.
Hi, Jeanette.
Question, go ahead.
Maybe if you want to type your question in the chat, that works as well.
I don't think she unmuted herself. I think she has her little unmuted button on there.
Okay, I apologize. Dustin, this is Sean.
Hi, Sean.
Well, very good presentation. I had a question in regards to the life insurance policy and stuff. You know, my mom had a couple life insurance policies, but unfortunately, I couldn't review them, even though she showed them to me, because my older sister was on the life insurance policy. And when I tried to review it, for the NIC, because my name was not on it, I could not contest it. So what do you have response to that?
Yeah, and were you actually able to contact the carrier and they told you that you couldn't because you weren't a beneficiary?
Well, Unfortunately, my mom had showed me these life insurance policies, and I wanted to present them because Dustin had actually reviewed my life insurance policy with me and my wife,
Mhm.
and I suggested to my mom, well, because I wanted to incorporate her into the CBC, family, so to speak, and she showed me the policies, but then unfortunately, somebody wasn't available. So she said, okay, well, we'll do it another time, but another time showed up. So I wasn't actually able to actually present the life insurance policies that she had, but my older sister, was on the account, the sole account. So I wasn't able to actually review them. So how would I actually, review them even
Yeah.
though I wasn't on the account?
Yeah, that's unfortunate. Yeah,
And there
because
was
you're not on there. And
yeah,
you're not a beneficiary, so that's going to be difficult because in other words,
but
you
how
don't
would
have
I
any
contest
insurable
it?
interest.
But how would I contest it
You would probably have to
if I wanted to?
yeah, you would probably have to seek an attorney's advice. That's what I think. Because you're not
Yeah,
on there, so of course the insurance is not going to talk to anyone that's not on the policy. If you're not a beneficiary or you're
correct.
not, yeah, on there. And is your sister willing to talk to them and talk to you about it or not?
Oh no, no,
No.
she's one of those individuals that's a greedy person.
Oh, no.
But we don't want to discuss that on the phone.
Yeah. So what if you want, what you can do, I forgot your name. What did you say your name was, Sean?
Sean, correct.
Sean, nice to meet you. So what you can do is give me a call and we can talk about it further. Were you able to write down my number?
Oh well, I can see it on the forum.
Yeah, that's fine. Okay.
Dustin
Or
Dustin
Dustin
can
can,
actually
yeah, Dustin can,
introduce me to you.
yes, that'd be great. And that way we can look into it further for you. Be happy to help you. Mhm.
But great presentation, by the way.
Thank
Thank
you.
you. We appreciate it.
Anyone else?
Okay.
It looks like we have a
Sounds good.
question here from Emily, Maria. Emily says, what does it mean when the quote unquote rented insurance can expire? What happens to the money?
Oh, yeah. So that's your term policy. Exactly. It expires, right? So it's kind of like renting a house. When you move out of the house, you've already paid all your, right? You've paid all your rent for every year that you've been there. And you basically don't own it. You don't own the house, right? You don't own the apartment. Same thing with life insurance. If you have it for 10, 20, 30 years, and after that 30-year term, let's say you don't pass away. Well, that's all. You're not going to get any benefit from it unless you have one of the life benefits that on there. It's kind of like a rider, so you can get on there a return of premium. So the return of premium, let's say you get a 20-year policy and you still haven't passed away after the 20 years. If you have a return of premium actual rider on there or benefit, you will be able to get your returns, which will be the premium that you paid into it. However, those type of policies are usually a little bit more expensive. So my recommendation is always, if you're going to do that, then you might as well get a permanent policy, because that will last you forever. Those don't expire. And you're earning a cash value in that type of policy. So you have two components. You have your death benefit, which can be, let's say, 250,000. And then you also have a cash value. You're building a savings account in that policy, and it's growing an interest higher than you would in any other institution or bank, because those rates are guaranteed to be at least between a 2 or 3% interest on those type of policies. So I always recommend, if you're worried about outliving your policy, then the best thing to do is to get a permanent policy. I hope you answered your question.
She says, okay, thank you.
So,
Sounds like we're good. That's good advice, Maria.
yeah.
I see we have some people typing. Does anyone else have any questions? Happy to address anything you might want to know. Give everybody a few minutes maybe to just type something in.
Don't be shy, guys. Come on, we're here. There's a question.
Okay, inflation question. Love it, Olivia. So I think so Olivia says, for anyone who maybe dialed in and can't see what Olivia typed, she says, question for Dustin, how much money is recommended to be invested to beat inflation? And that's a really great question, right? Because inflation is something, believe it or not, that happens all the time, whether we realize it or not. But it's really something that's forthright and kind of been brought to our attention in recent months, in the past year, with all of the stimulus money that was issued, right? I think there was a statistic that I read that it was almost up to, I think, 20% of the current money supply was printed in the last 3 years. That's daunting. So what inflation is, just as a start, it's when our buying power of our dollar decreases, right? I went to go buy, what was it, like steaks or bacon or something the other day, and I think I read the statistic that bacon's up like 15%. So inflation is when our dollar doesn't go as far. So what are our options, right? What's funny and kind of intriguing to me is that when we have money in an investment account and we see the money start going down because of market volatility or things of that matter, obviously people get concerned. I get concerned. But what you don't see in your bank account, even though it feels safe, is that the value of your dollar is actually decreasing over time. So one of the best ways to combat that is by taking a portion of your income and investing it somehow. There are all sorts of different ways, Olivia, that we can do that. One is in maybe a general purpose investment account, like a brokerage account. Another might be in the form of life insurance, another great tool that you might use. Now, again, I would encourage you, should you want to know more about the specifics of what's right for you, please feel free to reach out to me and talk to me, because I can, once I better understand your specific situation, I can tell you, okay, this is how much you might want to put where. And there's never any guarantee that we're going to beat inflation, right? I mean, by leaving your money in a bank or a credit union, you're kind of unfortunately admitting defeat. But there are other options that you do have available to you. But again, most of them typically don't come with any sort of guarantee. So I hope that answered your question. I'm glad that you brought that up, because it is something that's top of mind for a lot of people right now. And it's something that I'm approaching strategically with my clients. So thank you. And it looks like we have another question, insurance question from Francisco. He says, Maria, he says, insurance question, can you get life insurance with a pre-existing health issue such as Alzheimer's?
It depends on the carrier, and there's several carriers. Of course, there is a policy called guaranteed issue, and a guaranteed issue policy is you don't need a medical exam, not even a medical questionnaire. So it's just, it's kind of like what they call for burial expenses, or most of it is for that, but you can use the money for anything else. But those type of policies are smaller. I think the biggest amount you can get is 50,000. But those are guaranteed issue, and they are going to be a little bit more expensive than a term policy would. And then there is other carriers that might look at, like, say, diabetes or high cholesterol, or let's say you're under some type of medication, you have it under control. They'll give you, maybe you won't get a preferred rating, but you'll get a standard or non-standard rating, which is, because you have some kind of medical issues. So there's a lot of other carriers that we can check for you, and I'm sure we'll be able to find something to be able to at least have some type of policy, life insurance policy in place. Is better than nothing.
That's well said, Maria. I think there was another question here from Josephine. She says it's something similar. She says, I'll quote her. It says, what are the options for people with pre-existing conditions? Does a kidney transplant vouch a person can sign up for anything for future needs. I mean, Maria, if you want to weigh in, but I think that's kind of in line to what you
Yeah,
were
that was
talking
kind of in
about.
line to what I just said. Yeah, it's not going to be that easy. I mean, to find, but like I said, a guaranteed issue policy guarantees that you do get coverage no matter what kind of condition, no matter what you have. I think the only thing they look at is if you've had cancer. If you're a cancer survivor and you've had it recently, then they probably won't approve you. But if it's been more than 10 years, 5 years or 10 years in remission, then they'll consider it. So it has to go through underwriting, but yeah, it's not easy, but we can find you something, some type of coverage. And of course, the best time to get life insurance is when you're young, right? When you have no existing conditions, no medical issues. But unfortunately, most young people don't see the value of life insurance until it's kind of late. I see a lot of members coming in their 50s wanting life insurance. And of course, I mean, we can help them, but it is a little bit more expensive and more difficult to achieve. But the best time to do it, and like we were talking about, Dustin, is time, right? Time is what's against us. It's not nothing else. It's really just time. And the longer you wait to make these decisions, whether it be getting a life insurance policy or start saving, investing money, making your money grow, the longer you wait, the more you lose. So that's
Yeah.
just
Time is the most valuable resource on the planet. I've been constantly looking for a place I can buy more of it, and I don't think I will ever have success in that. Anyway, it looks like we have a few other questions. Emily also asked, benefits of going with a bank such as CBC versus Primerica. I don't know, Emily, if you want to maybe chime in and tell us, are you referring to maybe more on the banking side of the products and services CBC Federal Credit Union offers, or the insurance benefits, or more on the wealth management side? I think she's typing, so I'm going to give her a second to follow up on that, and then we'll address another question that's here. Josephine said, what can you recommend as starting up on investing? What type of investment is best? Love that question. Man, and again, Josephine, with all seriousness, it just depends. It totally depends on your situation. For example, I have a young man who I'm working with right now, and he's 18 years old, and we found that the best potential solution for him was a portfolio of mutual funds in a Roth IRA to, start planning for retirement. Now, I also have plenty of people who I see that just are sitting on extra cash, right? It depends on a handful of things. And what I would encourage you to do is take down my telephone number or my email address. I'll put it in the chat since our PowerPoints aren't up here anymore. So that way you can call me or email me, or I can even reach out to you directly after this webinar so I can talk to you in more detail. And yes, Emily got back to us. She says for life insurance and retirement. So, Maria, why don't you take the lead? What's the benefit of working with the insurance agency here at CBC Federal Credit Union as opposed to somewhere else?
Well, first of all, if you're already a member and you have an account, that's perfect, right? Because you have everything here with us, and we're going to take care of you full circle. Your money's here in an account. Maybe you have some investment with wealth management. And of course, if you do your life insurance or even your auto insurance, your home insurance, your business insurance, everything's here in one place. It's a one-stop shop. So that's already one benefit. And of course, I mean, you have great carriers. You have A-rated carriers all the way around, trusted carriers. And also you get great customer service because my goal is to provide excellent customer service. And I'm sure Dustin also, we're trained to do that. Jesus would not expect anything less from us, right? So we're going to provide that excellent customer service, go above and beyond to try to help. And we thrive on that.
Yeah, if I can parlay on that, Maria, for you, Emily, just to kind of give you an idea, the thing about banks is they're for-profit entities, right? They exist to create a profit. Now, credit unions are typically not for-profit entities, meaning that sometimes you'll get a little bit better rate on a loan, for example. In the situation here with our wealth management program, which is really nice, is we're a startup. For anyone on the line who may or may not know, this program was only created about 2.5, maybe almost 3 years ago now. So a lot of the clients and members that we're working with, same case as Maria, you're going to get great service. At these banks, unfortunately, there's high turnover. And then maybe the person that you're working with doesn't really, in 6 months or a year or 2 or 3 years, doesn't know you the same way as the person whom you started working with. So one is obviously the factor of service. Two is potentially you might experience better costs on certain products with a credit union. And furthermore, they're more rooted within your community. So I think those are 3 key benefits that, me as a client of or a member of CBC Federal Credit Union that I personally enjoy. Hope that helps. Francisco says, does Camarillo branch have these services or only in Oxnard? Great question, Francisco. So Maria and I do go to all 3 locations. So we'll go to a location of your choosing. Maria does have one other team member. I'm currently a one-man band, as I like to say. So I kind of float from place to place, and Maria will do the same for you if it's more convenient for you to meet us elsewhere. Heather, thank you for putting our contact information in the chat. Let's see, we have a couple more questions here. It looks like one more from Brandon. This one's for you, Maria. He says, can you cross-shop life insurance like car insurance? For example, along with CBC FCU, I'm also a USAA member, and no other car insurance company can match their coverage and rates. You want to chime in there?
Sure, Brandon. Yeah, definitely. We can cross-shop life insurance. So what I can do is actually quote with all of the carriers that you saw on that presentation. So American General, Transamerica, Mutual of Omaha, etc. So many other carriers. And so we can actually shop it for you and make sure you have the best rate, best premium. And yeah, I mean, you're a USAA member, and thank you for your service, or anyone else in your family that is a service member. But yeah, you have that discount through USAA because it's a military discount, and they're actually giving you a great rate. So that's why it's so hard to beat that. But as far as coverages, yeah, we can match the coverages. It's just the rate that you have. You're getting a huge discount, and you should. I mean, you did your service, or someone in your family did, and you're getting that discount. So it's kind of, that's why but we definitely can shop the life insurance for you.
Totally. And on my side too, I know this wasn't posed towards me, Brandon. What I often do is I educate people about wealth management, and I show them what it looks like to do on their own, or the types of things that they're going to want to know personally if they go seek a second opinion. You want to understand what you're paying for, whether it's insurance or wealth management, and the pros and cons of, where you're at versus what else is available to you. So Maria and I are happy to do that. Norma has a question for us. Norma says, do you have any recommendations if a 12-year-old wants to start investing his earned money? Wow. Well, first off, congratulations to whoever this 12-year-old is, because I love this kid already. Yes, I do have ideas. I actually do educational savings as well as just general purpose investing for minors. There's certain types of accounts. A 529 account that I kind of alluded to in the presentation is specific for education. There's other tax benefits that come along with it that we can talk about in more detail. The second thing is that there's UTMAs, and that stands for Uniform Minors Trust Act, I believe, or I might have mixed that up. It's an account for minors, right? Where the parent owns the account and the child is the beneficiary. And CBC Federal Credit Union has these accounts. You could set up a checking or savings account, or we can set one up where the child has the opportunity to invest. So stocks, bonds, mutual funds, these are all things that are available. The other thing that I see now is a lot of people are using mobile apps for their investing needs. But, the issue with that is I find people that are overexposing themselves to risks that they might not be comfortable with. So especially at a young age, would love the opportunity to talk and educate whomever this young man or woman is that you're referring to, Norma, about the power of starting young. I even look at and run numbers all day, and I wonder why I didn't start doing this earlier. So it's never too early, and there's definitely things out there. Okay, Jesus Garcia has a very good question. He says, what is the difference between advisory versus commission-based investment services? Yes. So we're kind of going from 101 to 201 right now, but it's important for you to understand how you're paying for the service you're providing, right? I like to use a lot of analogies. I often use the analogy to some people, I'm just a gardener or a pool guy, right? I take on the labor of managing things for you and you go on and live your life. And yet know somebody's watching your investments for you. To other people, I'm a coach, right? A lot of the coaching didn't really come into play until maybe 20, 25 years ago. The concept of advisory business is relatively new in the investment management world. It just used to be where you'd buy shares of a mutual fund, A shares, for example, and you pay an upfront commission to the representative who sold them to you. Typically, the cost is around 5%. The problem with that, not that there is a problem, but this is a trend that I see, is that you pay for the service up front and then it's hard to get service on the account when you need it because the advisor already made their money. Now, advisory relationships is when you pay a fee, a flat fee. It's typically a percentage of the account value for the service that you get, right? So there's no upfront costs and there's no penalties per se if you close the account, like with products such as maybe an annuity. We can go into more detail on that later, but you pay a fee as you go. So what's nice about the advisory relationship is that it keeps you and the advisor accountable to continuing to have good service and escalating to meeting your goals. So I do have the ability to work in a commission-based fashion. I rarely do it. I always encourage people to explore the advisory option, but I do have a couple people who I work with who prefer to just pay the fee up front, and that's that. So great question, Jesus. I see Norma said thank you. Do we have any other questions? We've still got a few more minutes, and these have all been great questions, guys. So thanks for.
I'll answer on my side of the life insurance. We don't charge any broker fees. There's no broker fees at all. So I just take your application, help you, recommend, and then I submit the application to the carrier and then they handle the process from there. So, but there's no additional fees, no broker fees added on my side.
That's a big benefit.
Yeah.
Cool. All right. Francisco's typing. He says, thank you. We appreciate it. Absolutely. It's our pleasure. Mm-hmm. Let's give everybody just a few minutes, Maria, and see if they have any other questions. And if not, we'll wrap it up.
Nice.
Thank you guys for all the warm wishes. Thank you, Josie. And Francisco says he'll be in touch. Great. Well, I think we're good, Maria. We will reach out to us. We might even send a follow-up email just thanking you guys for your attendance. And Maria, thanks again for taking the time. I really enjoyed the conversation.
Great.
All right. Have a great evening, everybody. Thanks for
Good night, everybody. Thank you.
Bye.
Bye.